Hi everyone, welcome. I'm Sandy Leyva and I'm a CPA and I am super excited that you're here. My passion is helping small businesses improve, and we have.
My name is Jason Schwartz. I work with eBay. One of the other reasons that I'm here today to help talk to you guys is not only do I work at eBay, but I'm a big seller on the site. I sell about 15,000 items a year is what I did last year on eBay. So a lot of the things that you're going through as businesses and stuff like that, I've experienced personally and firsthand on my side. Cool.
So he's the favorite. I already tell we have a cheering section in the second row there, so welcome. All right, so I'm really thrilled that you made this session a priority. Most of you that I was going around, you know, we're talking about the numbers, and this is really an exciting thing. How many of you love numbers?
Quite a few of them out there.
All right. How many of you love profits?
There we go. There we go.
How many of you love the thrill of the deal?
Oh, yeah.
Yeah?
Almost
exciting? All right. So the good part is there's some pretty exciting topics we're going to cover in this very fast-paced session. And one of the things I want to share with you is I know we're going to go into a little bit of accounting, but I really want you to think profit instead of that word accounting. But when you do work with an accountant or you improve your financial skills, your chances of increasing your success as far as an entrepreneur go nearly double. Is that pretty cool? That's a pretty cool stat. So we're going to cover a couple of things. We're going to talk a little bit about getting you in the right tool. And the reason for that is there is some back office stuff that takes time that we all have to do. So we got to figure out what's the fastest way we can get that done and be efficient and get back to working on our listings. The other thing we're going to do is talk about some numbers you might want to track so that you can measure your success against yourself. How did I do last month? And am I improving this month? The other thing we're going to do a little bit of time on is that compliance. There are governments that want us to file paperwork, all right? So we're talking about taxes and accounting. Want to just make sure that you're taking the risks that you need to take and understanding those risks so you can make smart business decisions. And we're going to wrap up with a couple of just kind of miscellaneous tips to help you go on your way. So how much time do you spend on your business? If you're average small business, it's 138 hours a year. That equates to about 2 to 3 hours per week. So you may want to see kind of where you fit in that. Of course, it depends on the number of transactions that you have. So how can you streamline the reporting that you need to do and get good data, get information so that you can make good business decisions? And that is making sure that you've got the right accounting system. All right, so here's a couple of choices. Is there anybody in the audience that are on any of these? All right, we got some hands going up. Shout out which one you're on and I'll repeat for the recording. Wave and Excel. Who else? Outright. All right. Okay, fantastic. So these are some popular options and they're very cost effective. So how much does Wave cost, those of you that know?
Nothing?
A big fat zero. Wave is free. So is...
It's really good.
All right, we got testimonial here. All right, so one that a lot of people haven't heard a lot about is Less Accounting. And then what do you use, Jason?
I use Excel. I have a spreadsheet that I've built out and I duplicate or copy each year for my stuff. I've put quite a bit of work into it to get all my formulas and everything I need, but Excel has been the tool that I have used for the past 4 or 5 years.
Great. And I think Excel is fantastic to really get to know your margins and to do that timing matching that you actually lose when you get into an accounting system a little bit. Let's look at some other things. In accounting, you may have run across an accountant that wants you to track inventory. Certainly at year end, we need you to adjust for it, but you may not have to do it all year long. Now, you see the benefit of doing that for you, right, Jason?
Yes, I update my inventory on a monthly basis based off of all the transactions, and I have to file my quarterly taxes, but I itemize all my transactions, about 4,000 or 5,000 typically in a quarter. So I keep track on a regular monthly basis to make sure I don't fall behind.
Yeah, and Jason was kind of humble during his introduction because this guy does 15,000 transactions a year. That's pretty cool, right? So you're learning from the best here. All right, so a couple of other, really from a market popularity standpoint, you may have heard of QuickBooks Online or even QuickBooks Desktop. Anybody on that one?
Got a few people out there.
Yeah, so those are the people that are in my world, kind of that I've talked to, and then also Xero is a fairly new entry. It's I think been around for 5 or so years now. Come out of New Zealand, and it has a cloud accounting system option. Now you could use these packages, which are priced a little bit higher price point than the ones we covered in the first slide, and you could use them with or without doing the inventory thing. So let's talk about the inventory thing, all right? The inexpensive way to do inventory is to take everything to an expense account. When you do that, you don't necessarily know exactly how much you have in inventory, or I'll say your accounting system can't track exactly how much you have in inventory. Another option to do your books is to take each purchased item to an inventory account, and then when it sells, you can do another transaction that takes it into expense. Anybody do it the expensive way?
Got a couple people.
Do you guys know?
3 or 4 of them out there.
All right. Any of you do the inventory way?
No, a few hands.
Okay. Anybody, do I need to kind of clarify which is which now? Okay, so when you're first purchasing an item, what you're going to do is you're going to take it to an expense account in your accounting system. So it might just simply be cost of goods sold is what the name of that account typically is. All right, so when you purchase an item, the cost of that item is going to go into that account. That is really the best way to do it. Because here in this slide where it says the right way, it's not cost effective for most of you. Now Jason is the exception, and he likes to do it that way because he likes to track his records. But if you're looking to keep your accounting costs low, then the best way to do it is take it straight to the expense account, and then when your tax accountant at the end of the year asks how much you want, how much you haven't sold, you can give them that inventory amount. You can calculate that by just kind of looking around in your storage area.
Is it based on purchase price?
Yes, it is based on purchase price.
Now, sorry, go ahead.
Exactly. And we call it real time. So real-time records would be doing it the second way, what's labeled as the right way, which I'm not recommending, doing it the right way. So yes, and I just recommend that you keep it really, really simple, because most of you have such a high volume of transactions, it's really going to keep your accounting expense down. But you will have to make that adjustment at the end of the year. You also might want to track it outside of your accounting system so that you have better matching. You know exactly what the sales price is going to be versus the cost of the item.
Now, for me, I like to personally see at the end of the month, look at all my items and know my profitability for each individual item. It helps me make better purchasing decisions moving forward instead of lumping it all together in one.
Mm-hmm. So there's 2 ways to do it, is what I kind of want to talk about at this slide. And we can, if you've got questions about this, we can cover this more in the Q&A, but let's go ahead and move on. There's some very cool numbers that I think are useful to track. So, when you get in a car and you drive, you always have a destination in mind. But sometimes with our business, we kind of just let it happen. A lot of times we get into this business from a reactive standpoint. Something happens, and we end up, loving it as we're, listing our items on eBay. So what I'm suggesting is let's take a more proactive approach from a business standpoint, and let's figure out what metrics that we can track to see if we're improving on our profitability. profitability. So one of the ones that you may want to think about is the number of customers. If you don't really care about whether you want repeat customers or not, then skip this metric. But if you do want repeat customers, or if you're possibly in a business model like a consignment type model, you might want to think about this metric. In a consignment situation, you're actually going to have two types of customers, right? You're going to have the person that you're consigning the item with, and then you're going to have the purchaser, the customer that's actually buying that item. So in that case, you're going to kind of have two lists of customers to work with. On the number of items for sale is the second one there. And in that case, we're looking at how many transactions are you doing? How many items are you listing at any one time? It's kind of a pipeline thing, Jason, right? You want to have a whole, you want to have a high volume listed on eBay at any one point in time. And then you also want to have items that need to be listed on eBay that are kind of in your storage area and that kind of thing. What are some of the things that you track, Jason?
I monitor the amount of listings I have. It's like my conversion rate is something that is important to me and things like that. But I mean, the number of items and quantity I have available for sale, because I mean, I've found some bizarre correlation between the amount of inventory I list and the sales I actually get on the site. I mean, I don't know if anyone else has figured that out, but it seems the more I list, the more I sell. So
how about that? That's a big tip for profitability here, right? All right, and the other thing I think that's useful to track is your average sale. You look at the total number of sales, and then you divide it by the number of transactions. That should actually be transactions. You could number of sales, which is effectively the same thing. So that those are three to think about. Here's a couple more, a little bit more advanced. Those of you that are tracking inventory can do this one. And what you do is you take the total amount of your purchases, so the cost of the items that are for sale, and that balance is in an account called cost of goods sold. And then you divide it by what your average inventory is. And typically, most retailers will take beginning of the period inventory balance and end of the period inventory balance. And that's how they get the average. So you can make that computation. But Jason has an even better way to calculate that, right?
Well, with my inventory turnover, I know constantly what I have in stock at all times. I run my numbers, like I said, on a monthly basis, and I know where my sales are at, and I like to just follow the right. I know that I come in around 30 to 40% inventory turnover on a monthly basis, which is very high for the average customer. But that's the number that I kind of follow, and I keep them all in my head, and I just run with those numbers. I can step back and take a look at my business at any time, and I can see spot trends based off of the numbers that I run through my head and through my accounting software.
Right, and so the higher the number of your inventory turnover, obviously that's going to track to profits, and so that's another predictor of profits. If that starts to go down a little bit, you know that you're going to probably want to look at cash and look at profits and see if you can't get more listings. The good news about this next one is it's available in the Seller Hub, as is the number of transactions on the first slide. This is called retail conversion, and Jason alluded to it earlier. What you do is you take your number of transactions and then you divide it by customer traffic. There's actually a screen in the Seller Hub that lets you see the volume of how many search results your items came up in. And then the next column is how many click-throughs. So when you take the number of click-throughs and then divide that by the total sales, that's another way to look at your conversion.
So, how many of you are already familiar with the Seller Hub and use it on a regular basis? The majority of you. Well, one of the things in there is there's like a performance tab, and you can go in and you can see your traffic. And I love this one. I jumped in here a couple days ago, and my best-selling shoe that I've sold almost 900 pairs of this one shoe. I took a look at the numbers in the past like 30 days. It was a good amount of impressions, but my click-through rate was like 0.5%. That's 1 in 200 people. That seemed like, I'm like, well, that doesn't sound very good, but I mean, I'm selling 10 of them a day. So, I mean, I'm doing something right in those regards. But you can use these numbers, and you can sort highest to lowest and lowest to highest, however you want to do it. And I love to go in there and take a look and see that, like one of the shoes, it was a kid's shoe I had, 450-something impressions, not a single click-through. Well, that listing needs to have a little more TLC put on it. I need to go in. Is my picture bad? Is my description bad? Is it just a bad product? Is my price wrong? These analytics that eBay provides for you will allow you to go in and micromanage those and see, well, what am I doing? Why is my click-through rate so high on this? Why am I selling these so much compared to these? And you can take that information and make your poor listings better. And well, sometimes you just need to decrease your price. You might have overpaid, and you got to sell it to move it. So these metrics will help show you which listings need a little extra time and attention.
Great. And with this particular conversion, I call it the eyeball statistic, and I think it's probably one of the most important. So if you haven't looked at that before, I really encourage you to go to your dashboard and to your Seller Hub and your performance and take a look at it. The last one's a little bit advanced. For those of you who have strong business models, you know that there's fixed costs that come with the package of doing business. So these are things like your computer, your telephone, your automobile expense, your storage expenses, your shipping costs, your fees, all of those kind of things. So what you would do is you would take the fixed costs, you would take the overhead is another word for that, and figure out what that number is. That number needs to be covered by your profit before you can start to generate a profit. All right, it needs to be covered by your sales before you can start to generate a profit. So then what you want to do is take some averages with what is your average price, and then subtract what are your variable costs, which include things like shipping and handling and your fees and the cost of the product, those kind of things. And when you do that, compute that as the numerator, and you can figure out how many sales you need to make in order to break even. Now, in those fixed costs, you can also add your salary, so that you can actually compute a sales number of what you need to make this a viable business. So I think that's a really great statistic, and that may be something that you want to work with your accountant on. They can help you compute all of these numbers. All right? All right, let's get into the compliance part. And one of the things we want to do is we all have to pay taxes, death and taxes, right? But there is nothing wrong with maximizing your deductions and minimizing your taxes. So these are some of the categories that you want to make sure that you can deduct your expenses. So hopefully everybody is deducting things like car and truck, your gasoline, your mileage. You know, when you're going from garage sale to estate sale, that is deductible. So be sure that you're including those kind of expenses in your business, because Uncle Sam will give you a break on taxes. Another thing is this cost of this conference is deductible, right? Everybody know that already? The cost of this conference is deductible. All right, so definitely want to think about how you can use that. A portion of your meals and your entertainment here is deductible. And Jason, what other expenses do you recommend?
My favorite one, and people laugh at me on this one, that if you've seen me around the office and outside of the company-provided shirts for sessions like this, my sunglasses, they're Nike. My shirts, they're Nike. My belt is Nike. My socks, my shoes, my shorts, everything I pretty much wear and own is Nike, because that's the product line that I sell. I deduct those as uniforms and marketing. I live the brand, I push that out. So when I go to actually buy something, I know what my tax rate is. I look at something, I say, here's the price tag, and in my mind I already calculate, well, I get this discount from taxes because this is a deduction. It's my uniform. So that's how my brain works. That's my favorite deduction that I've done. Now, talk to your accountant before you do things like that, though. That's my one recommendation around those. I mean, it all depends too on your comfort level on certain things. But like, I sat down with my accountant the one time. I think it was October. I wanted to have a yearly review to make sure that hey, you know, we're coming up to the busy quarter, busy time. I want to make sure I got all my ducks in a row here and I'm not missing something. If there's something I need to do or invest in, or what can I do to get my tax bill down? And one of the questions I asked my accountant at the end of that session, I was like, all right, give me some more deductions. What can I do? What am I missing? What am I not thinking of? And he just laughed at me and said, I think you have everything covered. You know, I mean, give your accountant everything. Let them come back and say, no, you can't, or yes, here, but you got to do this. So think outside the box. You'd be surprised at some of the things that you may be able to deduct, but make sure that you seek professional guidance on that before actually doing it.
That's a great question to write down. Have I deducted everything? You know, asking your accountant about that. All right, sales tax. Let's just cover this real briefly. It is an issue in many cases. Do you think that little guy is taxable?
Yes. Who thinks yes? Put your hands up. All right, well, a good portion, about 30–40%.
Who thinks no?
I'm assuming the other 60?
Okay,
You're
very
both
good.
right.
Who says it depends? Yeah, it depends, right, on the state. Because in Texas, where I'm from, the answer is yes. But in New Hampshire, nothing is taxable because there's about 5 or 6 states where there is absolutely no sales tax. Wouldn't you like to live in one of those, right? How many live in one of those states where there's no sales tax?
We got
Anybody
a few of you
here?
out there.
Cool.
Nice.
Okay, so we really do need to cover sales tax, and one of the things that's been happening in the last 5 years is the states have gotten a little bit greedy with trying to find revenue. So they're looking for they're looking all over everywhere for revenue. And so the amount of sales tax audits has increased, and I want you to know this one word that you can work with your accountant on, and it's called nexus. And that word nexus means presence. And if you have a presence in a particular state, then you may have nexus there, you may need to file there. So for example, if you are selling items or have a warehouse or happen to have an employee or even a contractor in another state. For example, I have 2 offices. I have one in San Jose and one in Dallas. So I have nexus in both California and Texas for what I do. This is something you'll want to check with your accountant. I'm not going to go through all of these questions, but these are some of the things that create nexus. The other thing that's incredible about sales tax is look at how many different sales tax jurisdictions there are. I have an eBay seller friend in Florida, and in Florida they have 61 counties. And what she does to simplify her sales tax is she takes the highest sales tax rate out of all the counties and collects that. And so I'm not going to really make a comment on that one way or the other, but there are some ways that you can try to really simplify the whole sales tax deal. I think my action item for you is to think about sales tax, make sure you're taking the risk you think you're taking, have a conversation with your accountant so that you understand what risks there might be in terms of what you need to collect, things like exemption certificates that you may need to keep track of, and then also if you need to file reports on a quarterly or annual basis. Okay, and they've got a couple of resources for you here on sales tax if you want to research it yourself. And what you can basically do is just go to Google and key in sales tax and eBay, and there's some great articles that will come up to help you get up to speed in this area. All right, one last item in the compliance area is incorporating. How many of you are a corporation, an LLC or an Inc.?
We got a decent amount, a few people out there, probably about 20%.
All right, so something you may want to have a conversation with your accountant on is whether there are any tax benefits of incorporating. You may be able to save money on the self-employment tax if you incorporate. Now, the downside of incorporating is there's some paperwork, but again, you may be able to outsource that or do it yourself. So I just want to bring it up to give you the idea. We're trying to find, we're trying to give you all of these ways that you can save money and make more profits. So these are things for you to look into and work with your accountant on. The last section before we take questions is financial smart. So the more that you get financial savvy with these numbers, the better off you're going to do in terms of being a successful entrepreneur. And I don't like that word accounting myself, even though I'm a CPA, but I love that word profit. So if we have just a little bit of a different filter on it, right, Jason, then I think we can really do well with it. So some of the things that you can do to keep better records include things like breaking out your chart of accounts. I've never understood the fact that we have like 20 or so expense accounts on the income statement, but only one or a few revenue accounts. Because revenue is what really matters. So we want to think about how to break those out in different ways. Jason, do you want to talk about how you break out your...
One of the reasons I love using Excel for my accounting stuff is I break down everything. I'm a numbers guy. I went to business school, I got my degree in finance and all that, and I love analyzing and breaking down numbers. I have everything broken down. I know for a fact my shipping comes in about 13% of my total revenue. My cost of goods are 60%. I can give you every expense that I have, from repairs to supplies, broken down to the percentage. One of the reasons I like to see these types of numbers broken down is things change, conditions change, you might overlook something. If something starts to go up or down, that's a warning sign. Are you doing, you could be doing something wrong, you could be hemorrhaging money. You want to know, and you want to be able to spot trends before it gets too late. So by tracking individual numbers, and you can chart them, or just glancing at them, you can make sure that money's staying where it should in your bank account. And I've noticed my cost of goods and things have adjusted and gone up over the years as I've adjusted my business, but I understood why, and I looked into it, I analyzed it, I made sure I was doing the right things. So that's how I like to break mine down, and that's the value it brings to me. So I know exactly where every penny of my business is going, and if I am not making enough money, I can look to certain things to bring in more profitability.
Cool. All right, so I recommend, especially if you're selling multiple categories, to have separate accounts for that so you can track your volume. So I met someone today at lunch that sells model trains and watches. Yeah, that's pretty interesting, right? And so I'm sure many of you are in that same boat where you sell multiple things. But I would recommend that he tracks his watch sales, and he may even want to do it by brand. And that way you can look back and see what your numbers are and how you're tracking and which brand is doing better, which brands you can mark up more profitability. So really give it some thought as to how you want to organize your revenue accounts, and work with your accountant on that. Or just if you know how to modify your accounting system, then you can do that yourself. Some other things is, most people want to keep shipping separate. Most people want to keep the fees in separate accounts. So certainly these are things you want to keep in separate buckets so that you can track them. And then we also, there's always a question that accountants get is, what is the difference between this net profit number on my income statement versus the cash in the bank? How come the net profit number is so much higher than the cash that I have in the bank? And basically it's a timing difference because of the unsold inventory you have. And it also may be a timing difference between what you haven't collected from your buyers yet. So that kind of makes up the difference there. If you reinvest in your business and put more items out there, then there is a constant timing difference to track, but in the long run you'll do really well. Jason, do you have a comment? You had a great, we were talking about this right before the session, about how important is profitability and markup and margin. So what I mean by that is you take your sales price and you purchased an item, and what is the difference? And a lot of people want to track that percentage, but you've been sharing with me that your percentage has gone down, but you've been very intentional about that. So I thought it was an interesting story about, you know, whether your margin increases or decreases.
Now, we're all in business to make money, but there's many different ways to do it. And when I first started out, I was learning my business, and I bought smaller lots because I was afraid to make large investments. But with each smaller lot, I was able to get higher rates of return. But the cost of that, which is not in the actual numbers, is my time spent on each individual item. Where I'm buying one or two, I'm having to allocate time to do that, where now I've adjusted my strategy to buying deep quantities. Like I mentioned earlier, that one shoe, my best-selling shoe of all time, I've sold almost 900 pairs of that one shoe. My best-selling item of all time, shoelaces, about 2,200 items currently on that one listing. I've adjusted to get the bigger quantities, but in exchange for that, my profits have gone down per item, but it's easy for me to push the stuff out the door from a shipping standpoint, and I don't mind buying more, taking smaller margins when I know the turnover is quick. Like that shoe that sold 900 pairs, if I'm selling 10 of them a day, and my normal rate of return was, say, $20, but I'm now making 12, but I'm selling 10 of them a day, that's $120. That's still pretty good. I mean, I don't think there's anyone here who wouldn't take 10 minutes out of their day to ship 10 items for $120. That's a pretty good hourly rate. So as I've adjusted my business, I've got higher sales, and with that has come, you know, smaller profit margins, but my profits overall have still grown because I've replaced it with quantity sold.
And I think that's a message that if your business is very time consuming for you and you are selling unique items one-off, you may have higher overhead than someone like Jason who's buying large lots and reselling the same item, because the investment in getting that listing perfect is spread across 900 sales compared to one sale. So these are different revenue models, and that is what I love about the eBay community. Is I bet every single person in this room has a different revenue mix that they love, a different time commitment, and so there is no right or wrong answer. It all is correct for you.
Now, the one cost that I think most people, especially when starting out a business, that they have a tendency to overlook is their time. I got a full-time day job, I got a night business, and I got a 6-year-old son who I want to spend time with. I can sit there and do 20 listings a day, make a higher profit margin and not see my son and be there for that, or I can do fewer, make a little less, and then focus on things that are more important to me. So I've found that balance between them, but don't devalue your time. That is something that needs to be considered. Your time is worth money. There's times I get calls for inventory and they tell me what they have, and I've already calculated the cost for how much I'll make off of that, and I'm like, okay, well, that's a 2-hour drive, and then there's this. Like, I look at that as like, okay, I'm going to make $600, but I have to drive this far, this much time. Am I willing to pay myself that hourly wage to do that? So I look at my time like that, and I've turned down stuff all the time because, no, I want this much money per hour, and I'm only going to make this much if I go buy that. I would rather hang out at home with my son. So those are things that I look at when I value or my business as to what is worthwhile to purchase and how I want to run it.
Perfect. A couple things to keep the accounting part of your business low time, because you do want to spend on those listings and acquiring inventory more than anything. And think about having separate checking account, separate credit card. I don't even have a business credit card, and my business is fairly large. I have a personal credit card that I only put business items on. Makes it so much easier, because in any bookkeeper or even yourself, you don't have to separate the transactions. It can all feed into your accounting system. And then also, if you have a PayPal account and you're using it for non-eBay items, you may want to have multiple PayPal accounts. What I've seen the larger volume sellers do is take all of their revenues via PayPal. So it really keeps the bookkeeping simplified when you do it that way. Also, if you are re-entering items and you want to move off Excel, then the QuickBooks Online and the Xero systems have two ways to integrate with PayPal. One is through a sync, and the other way is through bank feed. And what I've heard speaking about with most PayPal people, with most eBay people, is that you want to use the sync. So be sure, if you're working with an accountant, that you interface that way with PayPal with your accounting system using the sync instead. It just gives you a little bit better data, a little bit cleaner. All right, we'd love to hear from you. And if you'd like to ask a question, please step up to the microphone and let us know what your questions are.
Come on.
Awesome.
So I had a recent thing happen that I've been selling for about 2 years now, and I'm probably doing it a little bit wrong to where, so I've got items that, where I'm listing on there how many items available. I usually just do 1,000 and just make sure my inventory is always covered to cover that. Mm-hmm. So I recently had one where we had one of my distributors, they were backed up, and I was basically a week out from getting it and got the sale. And we basically treated it like we just called the customer and said, hey, unfortunately this is out of stock, we will have it in a week, is that good for you? And when I started doing that, I started thinking, well, should I have actually taken that listing off, or is it better to leave it up and get the sales and then just contact the customer and say, hey, would you like me to cancel this, or do you want to wait a week to get it?
Me personally, how I would probably do that individual listing is obviously reaching out to the customer in that case and notifying them is the right thing and working with them on that. But I probably would have gone in and changed my handle time on those. That's one thing you can do.
Handle time instead of taking the listing down.
You can do that instead of taking it down, because to me, what I've noticed, like, we're all fascinated with best match and where we show up on our search results and who gets the first spot, why they get the first spot. And we can give you the, be top rated, 30-day return. Yeah. We can give you all the things we've all heard a million times before, and they have an impact. They're all important. Even working at eBay, I've tried talking to the best match team to figure out more. They never tell us. They try to keep that algorithm secret. And even internally, they're like in a dark room hidden somewhere, and they don't talk to the rest of the company because they don't want us gaming the system. But the one thing personally that I found that is one of the best things for search placement is your recent sales history. As you get items and you have that history, it propels you in search. Also, as a buyer, when I'm looking at your item versus another, and I see that you've got 25 sold and the other person is a new listing with 0 sold, if it's comparable in price, even sometimes more, I'm going to be a little more comfortable in buying from you if I don't see there's negative feedback around this particular transaction. So I don't like removing the listing because I want that sales number attached to every one of my listings. So I would adjust the handle time in those particular cases.
Have you ever had to do that, or?
I have everything in stock for my stuff. Everything I store in my basement, it's all there, so I don't have to worry about that. But I've had other accounts that I've worked with, and actually my mom, who's at this conference here today, she adjusted her handle time so that she didn't have to take her listings down instead of putting her store on vacation or anything like that. So she adjusted that to reflect when she gets back in town on Friday, she can ship it all out then, and she still meets the handle time requirement, and the listing remains active with the number of sales.
That's perfect. That answers it. So, thank you.
I just wondered if you can elaborate on a couple of things he said.
Please.
As far as how do you keep your top-rated seller status if you're changing handling time?
When you change your handle time, you still meet the requirement of shipping it out within that time. As long as you meet that requirement, you're not going to qualify for top rated on that particular item. So if you go from a 1-day to a 5-day handle time, you won't get your discount of 10% on that item. But if you ship it out within that handle time, it still counts towards your percentage.
Okay.
So it doesn't impact you negatively as an account, as a whole view, but an individual listing, you don't get that discount.
Okay, perfect. And then the other thing is, let's say that you're below standard status, so you're limited to 500 per month. What do you think the best way to, okay, how can I say this the easiest way? So right now, for example, our account is below standard, and so we're limited. So a lot of our listings, we have to limit the quantity and then keep refreshing it. Is there any way to, other than checking it on a regular basis, to pull up if you run out of inventory, to pull it up so that it still shows how much was sold? Do you know what I'm saying?
Okay, so say you have one item, you've sold 10 items on that listing, you've got one in the quantity and the listing sells and the listing goes to 0 quantity and stays in there. Do you have the out of stock option on your listings? That means the option that your listing stays active in the system for 90 days.
No.
We'll want to make sure you turn the out-of-stock option on. That's something that we can show you. The health check team as well can walk you through that. One of the options is when your quantity gets dropped down to 0, eBay will hold your listing for 90 days. You have to pay the insertion fee or your store will take it out of one of your listings. But if in those 90 days you get the quantity back and add it to it, your sales history is still there.
Perfect.
So yeah, you keep that. I've got like 370 something or 390 active listings, but I have almost 500 total in my account. So the other 100 plus are listings with 0 quantity, and I love that because it used to kill me. I've got 85 sales on this item, someone buys the last one, the listing's gone, and then a week later I get a return on it, and I'm like, I can't show the customer I have great sales history. So now that option changes that, and I can even show you on an iPad and stuff like that after the session as well. But there is that health check team right across the hall that can sit down and go through one of those things with you.
Account checkup?
Yeah, account checkup.
Okay, perfect, thank you.
So I have a question that goes back to almost the beginning of this session in terms of managing your inventory as an actual dollar amount. So we buy wholesale liquidation, and it's unreasonable to track individual SKU numbers because we're an inch deep and a mile wide in terms of what we sell. How would you suggest that we go about doing that as just a retroactive look in terms of what our sold transaction history would be? And if that's the case, how do I manage that against what's sitting in my garage at the end of the year? Because currently, maybe this will affect it. Currently, what I do is I'm just tracking, on a month-to-month basis. We spent X amount this month on inventory. Now that obviously doesn't equate to what the actual sales value would be for those particular items. Which I know that's the number that I need, but in terms of what I'm paying and what I'm putting on
these
taxes.
places that you get them, do you not receive a manifest of a breakdown of the inventory?
These particular ones, no, and even the ones where I have, the manifest is so drastically out of touch with what the pricing is that it becomes really difficult to track it. So,
do you have any?
I think a lot of this is all in the averages, and one of the things that's a really incredibly important skill for all of you guys to have is merchandising and pricing. Absolutely essential skills, and those are skills that you have to learn and build. It's a learning curve like everything else. I would recommend that you actually manually choose a certain number of items that are your really high volume items you said they're all one-off, right?
That tend to be. I mean, we're lucky if we get 10 of the same items in any particular batch.
Yeah.
So that's great.
So I think it's a matter of kind of doing an auditing spot check on a regular basis to make sure your margins are tracking. The other thing you might want to do is if you're fairly even on your revenue and your inventory throughout from month to month, you'll know kind of what that percentage is in your books, even though there's a timing difference there. I mean, the other alternative is painful, setting up a separate item for each.
It's
just absolutely, yeah. And you do it with Excel. I would do it outside the accounting system because most of the people I know, they have one item for, almost everything, or at least by category. They have one customer for eBay. You don't need to track your customers, and one or two accounts. And so that keeps the accounting really low, but what you might want to do is just manually just play in Excel for a couple hours once a week just to make sure you're on track with your pricing and your margins.
Okay. All right.
We can talk even a little more after the session, see if we can come up with some ideas, and I'd love to learn a little more. We only have 1 more minute left of this session. I want to answer all questions. Also, anyone who doesn't get a question, I'm not going to be taking off. I'm going to be hanging out outside in the lobby out there. So I'm going to make myself accessible to anyone who has additional question or wants more information. So just because we're cutting you short, we still are going to work with you and try and get your answers for you. So.
All right, and one final thing.
Wait, he's got one. Let's take one more here.
Just a quick
sure,
one.
absolutely.
Yeah. I have a tax question, and it's based on, I sell eBay arbitrage, so I buy from Amazon, sell on eBay. I got about 300,000 listings, and the challenge becomes the 10% variation between eBay and Amazon, so it creates a tax differential. So do you have any accounting software systems contacts that can figure out what that variation is? I haven't found anybody that can do it, but I want to be very upfront with my taxes. And
You know what, give me your card, because I have no clue, but I have 1,600 accounting clients that I will reach
make sure I
out
get
to
you
and
one.
see if we can find you a person.
Okay. And just from a networking perspective, if anybody sells from Amazon to eBay like I do, or does
Yeah, if there's
dropshipping,
anyone in the audience
please
that can
connect
help.
with me, and I'll see if I can help you with your business. And I also have discount Amazon cards. You can find me because I have the vest, so I look like a waiter. The tips have been amazing. You people are very generous. Thank you.
All right, very good. So we covered 4 areas. We have one very quick gift for you. If you are in the market for a bookkeeper and accountant, you wonder what the heck to ask them besides how much do you charge, then I have a little 10-question item for you, and you're welcome to get it right there. All right, so just take a picture of that QR code if you want that free PDF. And Jason would love to get your feedback.
Your participation in these workshops are very important to us, and we want to make sure that they're tailored to what it is you want and you need as a business. And we're going to continuously adapt and adjust as the years go on, and the sessions go on. So we have surveys at the back on the table right over there. You can drop them off with these guys at the information booth. There's a few places. We want your feedback because we want to make sure that we give you the right information year in and year out. So if there's something that you need to know more about, make sure you tell us on these so we can create a workshop around that type of stuff and make it better. Oh, can you slide back?
Yeah, and there's our contact information there as well. So I kind of wanted to get that for you.
So I'm going to go hang out down by the bikes in the little lobby area there. If anyone's got additional questions, I know there's a few of you who didn't have your questions answered, so please come and see me. I'd love to help you out.
And if you're not into QR codes, just give me your business card and I'll email you this free report.